Welcome to Trading Lounge and the Commodity Futures Report for Monday, July 11th, and starting with the 10-year yields here on the upside here. So last time we spoke, we were looking for this pullback in wave 4 here, so we've got that. But the thing with wave 4s is that they tend to be a little bit complicated, so we could travel sideways within all of this particular structure, but we should stay within that low of that previous wave 4 here. So we may end up with we can count this as corrective, and by all means we could see this just push straight up from here, but just be prepared for an A and a B and a C wave here for that to get a bit more complicated to the upside. Now, I have been sort of questioned about this low here because a lot of folks have got this as wave 1 and wave 2, but when I have a look across other markets in this space, then to me it's pretty assured that we're going to be taking this as the low of this trend coming down through here. You can also see too that this as wave 1 and 2 and 3 here for all of this here. I know you could squeeze a 4 and a 5 to get it in here, but it kind of makes more sense to put the wave 4 over here and then the wave 5 at this point for it. So anyway, it'll all come out in the wash, and as always, we take things step by step. So the next step really is to see if wave 4 is actually done here, and we'll get wave 5 up to this point. And so, if we took that as the other way, then this could be the top over here for the rates at that point. But I think that we'll still be looking for 4, 5, 3, 4 and pushing up higher. So we're not going to be curbing inflation at these rates anyway, you know that. Feds are just going as quickly and as steadily, as firmly as they can. When it comes to the US dollar here, we're looking at wave 1 and 2 here from this low here, and we've also been working up as 3, 4 here. Now, it's also possible to look at wave 1 into this space here, but I sort of prefer it if we put wave 2 up to here, and we could also put, wave 1 up there. We could also put wave 2 here, but I think it's better with wave 2 over here as well, and then 1 and 2 and 3 and 4 and 5 pushing to the upside. Here we cover this in the Euro US dollar in the Euro DAX video, so you can look at the intraday on that point. But as far as commodities are concerned, we're going to still see this push higher into this space. So further upside here for this. And then looking over to the gold market, so just on this weekly chart here, just going back, so we've got 3 and 4 here, and then we've got 1 and 2 here, 1 and 2 and 3 and 4 and 5 up here for the third wave. We're looking for the fourth wave to pull back, and I can count this down in 2 ways here. Now today I'll be looking at it in the conservative manner to the downside, which will still take us down to 16 at least here. But just remember that this wave 4 here, the wave 4 of 1 lesser degree, is over here for that. So looking at 15 is also possible, and there's different ways that you can count this down, but I'll just be looking at it in the most sort of practical way at this point. But just understand that we can go deeper to this wave 4 here without too much problem. So let's go to the daily chart first, and the basic count from wave B up here would be 1 and 2 and 3 and 4 here, and then looking down for 1 and 2 and then working lower into this space here. It's also possible to put this, by the way, to have a deeper move down. It's also possible to put wave 1 down here. It just depends on how you want to count all this down here, but for the time being, we'll just look at 1, 2, 3, 4, and still moving down lower here in terms of 1 and 2 and a couple of 1s and 2s in here that we'll look at on the intraday chart in a moment. But it kind of gives you a look and a feel of what we're expecting to the downside. We could probably drag that even down further in this here while we're here. I'll just tweak that up a little bit. But yeah, obviously there's a lot of support going to be in play over here, but this is where we're going to get a lot of 4s and 5s in the market. But we'll go to one of these intraday tick charts here. The 5K should do the trick to get a good visual on this and find out where we're at with this. So maybe a bit more, okay, that's good. So we've got 1 and 2 to get your bearings, and wave 3 and 4 here, and then down for 1 and 2 here, and 1 and 2 here, and then 1 and 2 here, and then we're looking down for 1, 2, 3, 4, 5 here for the third wave in this space, and the fourth wave here. So this can still kick back into this space before we have wave 5, and then wave 4, and then wave 5 down to here for this, and then wave 4, and then then down at this point. So you can see that it's still we have a fair way to go within all of this to the downside with all of this move here. And I think that let's just have a quick look at GDX here. I mean, GDX, you can always find gold, GDX and gold in the Australian video, along with natural gas and also crude as well. So with this one here, this is also why I was looking at. I've tied this into the other chart, but we can also look at this, just not to freak you out, but 1 and 2 over here for this as well. So all of this is 1, 2, 3, 4 and 5 down here. So that's also possible. So you can understand that if this is 1 and 2 here, this will be some strong third wave coming into this space. So a much deeper move that can come in. I'll take that away at the moment, but just to let you know that that is floating out there as well for this. But in the meantime, we can just look at this as 1 and 2 here, and 1, 2, 3, 4, 5 for the third, the fourth, and the fifth wave to come down, the fourth. So still a long way to come down with all of this as well. And that brings us over to that. So that's the gold market. So this is just really a little dance around the 1750, and then we'll go to the 17 here and have a bounce, and then checking back to those supply zones and then rolling over further. This is not finished to the downside, so gold will be heading down. So also silver as well. Now I've counted silver in a very sort of conservative manner as well, but it can come much deeper, so just be prepared for that. But in a nutshell, 1 and 2 here, and 3 and 4 here, and then 1 and 2 here. Now I could go into the intraday and bring this down here further, so we've got an extra sort of move here for this. So I think that I will do that. The main takeaway here, right, there's just a couple of important things here, is that the $20, this is a CFD product, so the $20 mark here has been rejected here. There may be another retest of it, but it's certainly been becoming the resistance here. It's come through, it's retested it, and it's dropping from that point. The next important number, 19 is important. Every single number is important, but they've got their pecking order. So the 18 is the next most important level here, and then from that point, the next one down is the $16.50 mark here. $16.50, and then after that is the 15. They're the most important numbers: 15, 16, 50, and 18. Now 16 and 17 is normally quite important, but not what normally happens in this case is that you will find that 16 can have a bottom, 17 can have a top here, but the correction plays out at the 16.50 before it drops into the 15 here. That's the normal process. This has still got further to come down, whichever way you want to paint this picture. Okay, so I can look at this here as 1 and 2 in here, and I can look at this as 1 and 2 in here. So I can I won't go into the intraday here any further, but just to let you know that it may not retest the 20, but either way, it's still coming down. You need to be short rather than long in this market. And moving over to crude, so this is just the daily chart here for crude. We've been working the triangle pattern here, sideways here, so yeah, this will just sort of continue. I think that you know, the US dollar and and the commodities, be it gold or crude or copper or nickel or all of these, or uranium and palladium and all the rest of them, once that US dollar tops out, and we've got these sorts of patterns here, be it gold coming deeper and copper coming deeper, and or crude going sideways here, or natural gas, it's this point over here that the long trades will come in, you know, in the timing of things. So this has got further to go here. So yeah, I think that we also need to have a look at the energy sector here as well. I'm just going to bring the mining one over to here. That's the financial sector. What have I done with the energy sector? Hang on a second. So this is the ETF energy sector here, and these are the constituents in here. And we can look at this in two different ways, but whichever way we look at it, it's still coming down further. Okay, so it's still got more depth to come, and this depth can be even deeper than this, and in that case would probably even need to change this. I'll change this. Let me think about this for a moment. It just depends on how I've labeled this all up here, 1, 2, 3, 4, 5. So if I just redo that, I'll just borrow these here and I'll just put these back over here. Sorry about all of this, but that's going to come over here. We don't need that. We don't need that. We don't need that. That can come to here. This can come to here, and that can go to there. And what happened to number 5 here? Okay, we'll just grab this. Did I delete it? Wave 5 there. And we'll look at this as wave 1 here. That means I'll need to change these as well, so we can look at this in a slightly different way. I'll have to relabel all of that, but that's okay. This will be down here for that. That's where we're looking. So we're looking back at 50 for this, and we'll need to, I'll change this in my own time, but in fact, I'll just delete these. I don't need too many objects on the chart, but we'll need this, and we'll need to look at this. Okay, so I've just rearranged this a little bit. So I've just made the labeling a bit bigger. I still need to do work over here, but once crude oil finishes its triangle pattern, then it will move up. Then a lot of the stocks in this sector here will have the A, the B, and the C down here. So that's sort of how it will play out. The only mistake that I can make here is that wave A is in here and wave B is over here, and we have this as 1 and 2 here, and then move down further at that point. So that's the thing, but I think I've got this right. If I go to the 10K tick chart here, and I'll just explain this. I mean, it's important for stocks in, that's 10 ticks, we want 10K, and want, oops, no, we don't want that one. So this is the intraday here. I just updated it here. So wave 1 and 2 here, and 3 here, an A and a B and a C for wave 4, and then down for wave 5 for the A wave, the A, the B, and the C wave here, and then down for wave C. Now, the only mistake that I could have made is having this B wave over here and then looking at this as 1 here, a little A, B, and C for 2 here, and then down. So I'll keep an eye on that. But apart from that, we're looking for crude to push up as an A and a B and a C. So that should play out okay. So this here as an A wave, a B wave, and a C wave in crude here. So let's just go to the 4-hour chart. So we've been looking at this here as wave B here, an A and a B and a C wave here for this, and then looking at this as an A and a B and a C to make D, then the E here. So I think that's sort of where we are at the moment with this. So I think that's all okay at this point. So we can expect crude to pull back into its 50-60% retracement area, which is about here, down to about 9.7 at that point, and then a push up. So a bit of a classic trading levels pattern across this level and then over to here, and then we need to look at this here as the A, the B and the C wave over here to finish wave E off at that point. So unless I made a mistake of down for 1, back for 2, down for 1, back for 2. So if we breach this, if the 61.8% becomes the resistance, then we'll be coming down at that point. But everything looks pretty good at this point, and this will tie in nicely with natural gas as well. So with natural gas here, we've been looking from the top here as down as 1, 2, 3, 4, 5 here for wave A, and then we've been looking at this as 1, 2, 3, 4, then 1, 2, 3, ABC for 4, 5 here. It's a bit truncated here on this, but I'm okay with that. Otherwise, I'll have to shift it across here, and I'll just see how this plays out here. But yeah, the A wave, the B wave, and the C wave up here for this. We're not interested. You should have exited here or here once it plays up into the $6.50 mark for gas. So once again, I think we'll get this wave C up here, but if we don't, I'll be mindful of anything that we need to come down on through here in a quicker way. But it seems to be all going according to plan here. So it just depends. I mean, if I have to put wave 4 here, for example, and then wave 5 here, then this can play out a little bit differently here. But I think I'll just wait and see. We've had our trade, and we'll just wait for this to play out. And yeah, it'll be this side that we'll be interested in next. We might do a little journey up here. We'll see how that plays out with everything. But yeah, looking for this to the bigger trade will be the short trade here, but we could play with this a little bit. But this may not push all the way up here. That's the thing. You know, it may stick to this number, this $6.50, the 65 number. Yeah, it's an amazing little sort of number. We may just get some sticking to the, you know, to these supply levels in here, so making it quite short in that case. So we'll just need to be a bit careful about that. And copper, I've just tied copper in with gold a little bit. So from wave B all the way up here, an A and a B, and down for wave C. But it's a bit of a long shot for this as well. I think that we need to look at this a little bit differently now, and not so much the A, the B, and the C here. But it's a bit of a rock and a hard place. So I'll just tie it in with gold for the moment. But we can expect copper to be further down at this point. I mean, if we look at this as 1 and 2 and 1 and 2 here, nice third wave, whichever way you look at it, then a fourth and so on down here. We'll just move into the intraday. I think I've got it on the 5K tick. So there can be a little rally and then a move up from that point. So 1 and 2 here, 1, 2, 3, 4, 5. For the third wave. So we may get in line with gold and oil and those sorts of things. We may get this. So far this is an A wave, a B wave, and 1, 2, 3, 4, 5 here. So it's possible to put this wave 4 over here in that space, but I'll just give it a bit of chance because it hasn't pulled back up to its previous area through here. But this here would be the A wave, the B wave, and then 1 and 2 in here, 3 here, 4 here. So we need for it to come down here to the 34 area and then push up here and then fade at that point. But just be mindful, it's already got an A and a B and a C wave here, so it's possible for it just to continue to roll over. But yeah, if we look at this, maybe go from here on to 100 ticks. I don't know if I've updated it on the 100 ticks, but I haven't. But we still see it. So this would be the A wave up here, then the B wave, sorry, then 1 and 2 and 3 down here, and then 4 here, and then coming down for 5 here. So we could probably look at this as 1, 2, 3, 4, 5 for 1 here and 2 here, 1, 2, 3, 4, 5. So I think that we've got, you know, some sort of rally here down to the 34 area here, and then a push up. If the 34 becomes the retested resistance, you know, with the classic trading levels pattern like this, nice and simple, or even a bit more complex like this here back above the level, then you'll know that you're coming down further at that point. But just kind of expecting it to maybe push up with some of the other commodities, but we'll see how that pans out in due course. But it's at high risk here for this of certainly moving down lower in this space. Okay, so yeah, that's all I'm going to do on the commodities. So as you know, the commodities became a little bit big in terms of what I was doing in there. So I won't be doing the soft commodities because, you know, when I opened up and looked at the ETF for the soft commodities, and I had to look into, you know, beyond that and looking into those. So it just opens up a whole can of worms. So I haven't got the time to do all that. So I'm just going to keep this video as it stands at the moment is the yields, the dollar, the gold, the silver, the crude, the gas, the copper. And if you need to see natural gas and crude, maybe crude, and the gold market in a quick view, you can see that in the Australian market. So I'm just going to try to do the commodities regularly, but a good 3 times a week at least. But I'm going to keep it into a video that just takes 20 odd minutes to do rather than, you know, 40 minutes. Alrighty, cheers. But I'm always happy if you're a member to do a trade check on the commodities for you, on the soft commodities or any other market. Alrighty, cheers.